뉴욕나우. 안녕하세요. 글로벌 시장에서 통하는 투자법을 알려드리는 뉴욕나우 한국경제신문 강영연입니다. 오늘은 글로벌X의 리서치 디렉터인 로한 레디와의 인터뷰를 준비했습니다. 시장 얘기도 물어보겠지만 이분이 특히 원자재 쪽 전문가라서 최근 관심이 높아지고 있는 유가, 곡물 등에 대해서도 자세히 물어보려고 합니다. 그러면 인터뷰 시작하겠습니다. My first question about stock market. Market volatility has been severe this year. How long do you think this volatility will continue?
Yeah, I think there's a strong likelihood volatility could continue in the market for the rest of the year, just because we've seen, a lot more activity by the Fed pick up in terms of hawkish policy and them really continuing along this path, even in light of the Ukraine and Russia war. So we do see a lot more impact from central bank policies than we have seen maybe in prior years. And right now, the impact could be credit spread widening and then lack of available financing for a lot of companies. So I think between capital allocation policies and then ways that they're able to finance, some of these companies are now, moving into a potentially lower growth environment late cycle. So, we do think that at least for 2022, along with some of the supply chain concerns that have happened and labor market, strength that is raising wages as well, we do think that's going to actually make volatility persist in the market for the rest of the year.
Do you think most of the issues is priced in? Can there be a bigger correction within this year?
We think a lot of the correction has already occurred. In fact, given that the major indexes like the NASDAQ 100 and the S&P 500 were down, double digits just to start the year. So it's a pretty sharp move down. Some of it was multiples getting corrected. So there were some higher price stocks on a multiples basis that were getting bid up in prior years. And we think some of that contraction from earnings multiples going down and price to sales multiples going down is just an expectation that some of these stocks need to be normalized. So we do think, later on, if there is a little bit of a downturn in the market, some of it will be more related to idiosyncratic single company risk as opposed to, a broader market correction that will happen. Because right now, unless there's any sort of a shock to the global system from, an event like the Russia-Ukraine war or some kind of fallout around that, we are seeing that in the oil market where, Russia does supply a lot of global oil supply. So unless there's something along those lines that were to spread across the rest of the market, we do think the likelihood of like a major correction seems fairly low.
Some experts expect a rebound rally.
So I think there's a pretty good chance we could see a relief rally from here. Some of it was because as the market was down double digits to start the year, there is an expectation that, the US market is very strong in particular compared to some of the global markets. So earnings have generally been pretty good. I think earnings strength has been something we've seen over the last year or two that has really helped out a lot of these companies, even as, prices started moving up on the equity side. So if really strong earnings growth continues, that'll help the rally move even more forward. And then if we start hearing some commentary about what the reopening economy will do, we think that'll also, help out some of these companies that were hit pretty hard by the stay-at-home economy and just business models that were not able to, react in time to that. So we think some of that will actually help out the broader stock market, especially value stocks, which you see a lot of these names in like the energy, the financials, the retail sectors that do benefit from a more open economy compared to what we've seen in prior years. So we do think there's a pretty good chance that a relief rally happens in the rest of 2022.
You are an expert on commodity, so let's talk about that. These days, the biggest concern is oil prices. It can cause high inflation and it will accelerate the central bank's rate hike. What do you expect from oil prices this year? How long will the rise in oil prices continue?
Yes, this is probably the riskiest part of the entire economic equation, because there is a strong likelihood that we could see an oil price shock that we haven't seen this cycle. Russia accounts for 10% of global oil supply. So assuming that not a lot of their production is going to be online for Western economies that just with sanctions have been unable to purchase that Russian oil, all of a sudden that's a major supplier that is no longer within the market. So, between that, really, there's only a few other options to bring production to market, and that's through OPEC. They've been pretty conservative with how they've raised oil supply. So they seem comfortable, at least with the commentary that Saudi Arabia has provided, of leaving their oil production policies in place. And then U.S. shale oil producers, so they could come into the market with more of their supply. However, some of them have been also hesitant to raise supply just because a lot of their investors have been focusing on returning capital to shareholders and also through other activities like buybacks. So we think there's a decent shot that supply could increase from here through those avenues. But, right now with seeing a major supplier like Russia come offline and then inflation data that's come through that's close to 8%, and we'll see if it moves up higher from here. And then a lot of the reopening economy trends starting to occur. There's a pretty good likelihood that you could see oil prices remain in the triple-digit range for an extended period. The question is, what kind of a shock will that bring to the rest of the broader economy? Because a lot of the inputs for commodity prices do matter for the margins that these companies are making. So at these levels, you could see certain sectors affected by higher oil prices, those that use it as an input. But most of the strong companies out there, we think they can resist, at least at this levels, from facing any kind of like a major impact. But prices were to move up to like $140, $150, that would cause more of a global widespread issue.
What's your forecast?
Yes, oil prices, I think it seems unlikely that they're going to move below $90 for now, just because with the geopolitical issues that we've seen in Russia, it seems like sanctions getting lifted will not happen anytime soon. And they're going to be sort of on an island from an economic perspective, and that does have an impact on the global energy markets, including oil. So we think the supply is really the issue here of not having enough of it globally. I think, the other thing to look at is, what's going to happen with sanctions getting lifted in countries like Venezuela and Iran. That could bring some more production to market, but it seems like that may not happen, at least for the near term. So for now, we think that at least in the next few months, prices should remain elevated into the $100 range for an extended period. The question is whether there's major upside risk from the oil prices from here. We do think, prices could be in this like $100 to $115 range for the foreseeable future. But ultimately, if prices remain fairly high like that, a lot of smaller oil companies in other countries will say it makes sense for us to raise production. So longer term, you could see a normalization of oil prices, maybe after this year and into 2023 and 2024 of the $75, $80 range.
So do you think the 3 digits oil prices will continue until the end of the year?
I think there's a pretty good chance we could see north of $100 for the rest of the year, because to bring another 10% of global supply into the market will be very difficult unless it happens quickly. The one thing that's, I think, a little bit of a wild card is in China. We've seen COVID-19 start to pick up a little bit more. And so a couple of cities over there have been shut down. And so if there is another wave of COVID, that's always the unknown here. If there's another wave of COVID, that could cause oil prices to decline by, say, like $10 or $20 right off the bat. But assuming no COVID, we feel comfortable that there could possibly be $100 oil prices.
You think the biggest factor that affects oil prices this year is supply, not our demand, right?
Yes, supply, in our opinion, is more of the risk to the upside than demand is. Demand is certainly moving upwards, and airline activity has definitely picked up. But right now, there are some supply chain issues and labor market issues that are preventing the full reopening economy from really kind of taking off from here. And that's, I think, been somewhat of the bottleneck. Gasoline prices are also moving up. So there is a point where, gasoline prices start to remain, above $4, $5, $6 globally. That could cause some consumers to pull back on activity. So demand probably less so of the driver going forward, at least in the next, 6 to 12 months for oil prices moving up than conservative supply.
Do you think rising oil prices could have a negative impact on economy and stock market? Should it be concerned about that?
Yes, if prices start to move up beyond $120, $130 a barrel, usually as we've seen in history, when oil prices move up, it typically signals that this is the end of an economic period, or at least towards the end. So combine that with hawkish Federal Reserve policies that have been put into place of rising interest rates, it could certainly rein in some of the earnings that we've seen from some of these companies that, have relied on not only low input costs from oil prices or something like that, but also inflation was muted before and credit spreads were fairly tight, where it made it very easy to finance your operations. So a lot of those things are changing right now. The question is, how sticky are some of those inputs? Because this has really been the case for the post-COVID period. But once we start to get a more normalized economy that is fully reopened in the way that we've experienced in the pre-COVID days, if that starts to change, but I think there is an expectation that if prices do move up, beyond the $120, $130 range, that could cause some of these companies' earnings to potentially decline, or the margins to decline. And with that, it could cause stock market volatility.
The overall rise in commodity as well as oil prices is remarkable. Which commodity are you most interested in these days?
Yes, I think oil is certainly the one that we've been focusing on the most, just because it's been rising quite a bit. Obviously, there's been some news recently about the nickel markets and the wheat markets and the lithium markets that have been driving a lot of activity. I think the entire commodities complex has been in the news quite a bit, just because the prices that we've seen rise up have been pretty remarkable compared to what we've seen in prior years. So there are some that are definitely facing a bigger price spike than others. But yeah, the one that's kind of unanimous that affects most global companies is oil. Natural gas is also another one that we're looking at, and gasoline, just because if natural gas prices continue to move up as we've seen in Europe, it could raise consumer utility bills, which would again reduce spending power. And then along the lines of that with gasoline prices too. So the consumer has been very strong for the better part of the last few years. And to keep that momentum going, having both a strong labor market and then also lower commodity prices will be helpful for that.
In particular, the price of rare metals such as rare earths, lithium has increased a lot. What do you think the cause?
I think certainly supply chain issues have been top of mind. That's been an issue that's been pervasive across the entire global economy, but maybe, no industry more so than the rare earth market, just because rare earth metals control a lot of the things that we do in our daily life, whether it's smartphones, whether there are other inputs into other more like newer thematic type of investments, which are another area we've seen a lot of interest in. But some of it is because supply chain issues are just very pervasive right now. And also China is a big producer of rare earth metals, and they control a lot of that market. So some of the price rise might also be some posturing about, whether China may either face lower production of these rare earth metals, or whether they might, be content with hoarding supply, which could be an issue as well. So, the rare earth market has been definitely moving up in price. I think one option for companies involved in the rare earth markets, so whether it's an input or otherwise, is they could, again, raise end consumer prices. So we've already seen with smartphones, new iPhone sales, a lot of them are being priced at more premium levels. We could see this in other end inputs as well.
What do you expect the price of rare metals?
Yeah, I mean, each single one is unique, but I think if you look at some of the just general metals markets, it seems like they're priced very high right now. So I do actually envision the metal markets cooling off, just because, For example, nickel is a good example. Like the nickel market just rose up in dramatic fashion within like a multi-day time frame, even though it was moving up a little bit before that. But like that was a huge short squeeze that occurred. A lot of these metal prices are probably going to normalize at some point. Some of it was again pushed up by Russia just because they're big producers of both nickel and other types of metals that go into just end uses. So I think a lot of the upside that we've seen go into metal prices has probably already occurred. So we actually envision prices cooling off from here, which is good because that'll ultimately make other consumer applications more attractive from a cost and economic standpoint.
Prices of wheat and other grains are also rising sharply. What do you think about the grain market?
Yeah, this one has been, I would say, almost exclusively because of the Ukraine-Russia conflict. Ukraine and Russia control a huge percentage of that market, and wheat prices have just been skyrocketing from there. I think the risk with the wheat market spike is it's going to make a lot of things that are in, daily lives a little bit more expensive. And so with that, the reason that's important is because, if things like, rice, barley, wheat, if all of those become more expensive, not only will it raise again costs to the end consumer, but it'll make other things that they're used for as an input more expensive too. So again, it goes back to that theme of if the consumer starts to weaken, that could kind of weaken the global economy. And this is another avenue where that could occur. I think the other options for how they could potentially alleviate this wheat market concern is other global markets could step in and maybe offer subsidies or some type of incentive to have those markets grow more wheat and more grains and to alleviate the supply issues. But for now, it's probably going to be a short-term issue that persists.
Some analysts said the price increase in commodity market is a super cycle. How long do you think this cycle of rising commodity price will last?
Yes, it's very similar to what we saw in 2011, where commodity prices had that boom after the 2008 global financial crisis. I think what makes this one different is it's being caused by different factors. So COVID was definitely something that affected supply as a whole. So that was what was driving up prices. And then the second thing is now we have like a major war in regions where, those are controlled. They control a lot of the global commodity supply. So back then, the price rise was driven a lot. So because of the strength in the emerging markets, obviously that's not as big of a factor today. But the key is like what the timing is on, the global super cycle of commodities. So right now, it seems like there's some room to run. Maybe not, many years more, but it seems like we have not hit the peak yet in the global commodity super cycle, that there's still a little bit of room to run, partially because all the economic data still looks pretty good. The question is, when will it turn for the negative? And we feel comfortable with the fact that, probably at least for the next 6 months or so, prices are going to remain elevated just because supply chain issues are so pervasive. So right now, commodities seems like a pretty good place for a lot of investors to consider putting money to work in.
So, is this a good time to invest?
So depends what type of an investor you are. If you're a long-term investor and you're looking for strategic asset allocation, maybe you're looking at the diversification potential kind of nicely because a lot of stocks and bonds are not doing as well right now. Stock market definitely volatile, and then the bond market is getting negatively affected by rising interest rates. So commodities is a nice way to diversify that and also your risk-adjusted return potential. For tactical investors, yeah, the question is, whether the timing is right now. I would still feel comfortable buying, at least not the actual commodities themselves, but maybe the stocks exposed to them, whether it's energy companies, like oil and gas companies, agricultural and metals companies. These companies have, provided guidance that they envision things are going to go pretty well for the foreseeable future. So I still think for the actual stocks themselves is a nice time. And, if you buy it through something like an ETF, it reduces any like single company or single country risk per se.
What commodity investment do you recommend to long-term investors?
We really like the lithium and battery technology space. I think one thing that goes very well right now for lithium is the fact that electric vehicles are very much becoming popular, not just in developed economies, but we even envision like over the next few decades, they could become more popular in certain, emerging countries with bigger middle classes and higher income levels in the future. So, if you look out for the next 2, 3, 4 decades, electric vehicles are probably going to become a bigger part of the mix. So lithium is, the main input that goes into the battery technology behind electric vehicles. So as electric vehicle sales go up, that should bode well for demand for lithium as well.